Welcome to our channel. Today we're diving into the world of investments to help you achieve your financial goals. Whether you're just starting out or you're already a seasoned investor, understanding the different types of investments is crucial for building wealth over time. Now I know what you're thinking, investing? That sounds complicated and risky. And you know what? You're not entirely wrong. But trust me on this, investing doesn't have to be scary. By the end of this video, you'll have a solid understanding of the basics, and you'll be ready to start growing your money like a pro. So, let's get started. Let's kick things off with stocks. When you buy a stock, you're essentially buying a tiny piece of ownership in a company. Think of it like this. You buy a share of, say, Apple, you own a little sliver of that tech giant. Pretty cool, right? Now here's where things get interesting. As a shareholder, you have the potential to earn money in two main ways. First, if the company performs well, its stock price goes up, and your investment grows in value. It's like watching your money make more money. Second, some companies also pay dividends, which are basically a share of their profits distributed to shareholders. It's like getting a little bonus just for being part of the team. But remember, investing in stocks isn't without risk. The stock market can be volatile, meaning prices can go up and down, sometimes dramatically. That's why it's essential to do your research, invest for the long term, and never invest more than you can afford to lose. Trust me, I've learned that one the hard way. Now let's move on to bonds, which are a different beast altogether. Think of bonds like IOUs for grown-ups. When you buy a bond, you're essentially lending money to a company or government. In return for your loan, they promise to pay you back the principal amount plus interest over a set period. Bonds are generally considered less risky than stocks, especially if you're lending money to the government. I mean, they do have a whole country backing them up, right? And this is a big but lower risk also usually means lower returns. So, while bonds can provide a steady stream of income, they might not see the same explosive growth as some stocks. It's all about finding the right balance for your risk tolerance and financial goals. Chapter 3. Mutual funds diversification is key. Now let's talk about mutual funds. Remember how I said diversification is crucial? Well, mutual funds are like the ultimate diversification tool. They pool money from multiple investors to buy a basket of stocks, bonds, or other assets. Think of it like a one-stop shop for instant diversification. Instead of putting all your eggs in one basket, you're spreading your risk across a variety of investments. This can help cushion the blow if one particular investment takes a hit. Plus, mutual funds are managed by professional portfolio managers who use their expertise to try and maximize returns. It's like having your own personal financial advisor, but without the hefty price tag. Chapter 4. Real Estate Building Wealth Brick by Brick. Let's face it, there's something satisfying about investing in something tangible, something you can see and touch. That's where real estate comes in. Now, when I say real estate investing, I'm not just talking about buying a house to live in, I'm talking about rental properties, commercial buildings, even land. Real estate can be a great way to generate passive income through rental payments, and it often acts as a hedge against inflation. After all, they're not making any more land, are they? But, and this is a big but, real estate investing requires a significant amount of capital upfront. And let's not forget about the joys of being a landlord, dealing with tenants and property maintenance. It's not for the faint of heart, but it can be a lucrative investment if you're up for the challenge. Chapter 5. ETFs, Trading Like a Pro. Last but not least, let's talk about ETFs or exchange-traded funds. Now ETFs are similar to mutual funds in that they offer instant diversification, but they trade like stocks on an exchange. This means you can buy and sell them throughout the trading day, just like your favorite tech stock. ETFs are known for their low fees and tax efficiency, making them a popular choice for both beginner and experienced investors. They also come in a variety of flavors, tracking everything from specific industries to broad market indexes. So whether you're bullish on renewable energy, or you want to bet on the entire S&P 500, there's an ETF out there for you. Thanks for watching. Don't forget to like, subscribe, and hit the bell icon for more tips on achieving your financial goals. Remember, investing is a journey, not a sprint. It's about making smart decisions, staying informed, and taking a long-term approach. The sooner you start, the more time your money has to grow. So, what are you waiting for? Take control of your financial future and start investing today. Chapter 8. Bonus: Investing in Yourself. While financial investments are crucial, don't forget the importance of investing in yourself. This means dedicating time and resources to personal growth, education, and self-care. Whether it's taking a course to learn a new skill, reading books to expand your knowledge, or simply taking time to relax and recharge, investing in yourself can pay huge dividends in the long run. Remember, the best investment you can make is in your own future. So take the time to invest in yourself and watch as it positively impacts all areas of your life.